Chinese refiners have swept up Russian oil supplies as India, once Moscow's largest seaborne buyer, pulls back on imports. Analysts say China has purchased 15 cargoes of Russian Urals crude for delivery in October and November. Each of these cargoes, according to analysts, carries between 700,000 and 1 million barrels of crude, a significant shift in global trade flows. For months, India had emerged as the leading buyer of Russian crude after Western nations imposed sanctions and restrictions on Moscow following its 2022 invasion of Ukraine. Russian oil had been selling at a discount, making it attractive to Indian refiners. But last month, Indian state refiners paused purchases as discounts narrowed, reducing the price advantage. This opened the door for China to step in aggressively. Analysts confirmed that China had secured 15 Russian Urals cargoes for October-November delivery by the end of last week. China likely purchased 13 cargoes for October and at least 2 for November. These purchases, she said, could cut Chinese refiners' appetite for Middle Eastern crude, which currently trades at $2 to $3 more per barrel. That shift could add pressure on Dubai crude prices, which are already weakening due to fading seasonal demand and rising competition from arbitrage supplies. A trade source told Reuters that most of these Russian cargoes were booked at the beginning of August by both state-owned and independent Chinese refineries. China, the world's largest oil importer and the biggest buyer of Russian crude, usually prefers YSBO crude shipped from Russia's Far East port of Kazmino because of its proximity. But this year, China's Urals imports have averaged about 50,000 barrels per day. Indian state refiners have reduced Russian crude imports by about 600,000 to 700,000 barrels per day, according to Energy Aspects data. There is also a looming geopolitical risk. U.S. President Donald Trump has threatened to impose retaliatory tariffs on countries buying Russian crude if his push for a Ukraine peace deal collapses. Trump said last Friday that he did not immediately need to act but might decide in 2 or 3 weeks, leaving refiners in Beijing wary of potential U.S. secondary sanctions. As energy markets react to this shifting dynamic between India, China, Russia, and the United States, the coming weeks could decide whether these trade flows stabilize or face fresh disruptions. For more global energy updates, subscribe to the Indian Express YouTube channel and stay ahead with trusted journalism.